Hello traders, Matt Chapman here, the creator of the trademark Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 16th of January 2017. The trap we're going to look at today is one that I've never spoken about in the daily video before. It's what I refer to as a gap trap. Right? We've all heard of gap trading. This is a gap trap, and I'll get to the setup in just a minute, but I need to give it some context. This is the cable, the pound dollar, on a daily chart. And I want to just talk through the reason why it's gapped. This is presupposing you've got a gap on your charts, but by and large, and everything that I've seen this morning, the pound has gapped down. The reason for that is because of the Prime Minister's big speech on Brexit tomorrow, and there's been some leaks over the course of the weekend suggesting that there's the so-called hard or soft Brexit. She's going to go for the kill. We're going for the hard Brexit. In reality, it's just Brexit. It's what the people voted for. This narrative of soft Brexit's just been brought about by people who wanted to stay and remain inside the EU. And there's been a little bit of an information vacuum, which is slightly unfortunate, but the government has been very, very quiet since the Brexit vote. And that's allowed the Remain side and all their campaigners to fill that vacuum and start this narrative of this soft Brexit, where we have access to the single market and all that stuff. The reality is, though, it looks as if Brexit's going to mean Brexit. There is no such thing as hard or soft. That's just Brexit, and that would incorporate leaving the single market, etc. Customs union, and essentially the city hasn't liked that this morning, and you're going to have these event risks probably increasing the closer we get to Brexit and triggering of the Article 50. So just bear that in mind. Event risk is what can happen over the weekend when the market's shut, and it can be anything. It can be geopolitical, it can be a war, it can be something, you know, somebody did a nuclear test or whatever, or comment or an interview by a world leader or a central banker that essentially triggers a market move that you can't really do a great deal about. If you were in the trade over the weekend, you get caught irrespective. If you were in that trade, you may find that you just naturally, by definition from being in that trade, you're just naturally losing money. And that's what I want to talk to you about, the gap trap, and just I needed to provide that little bit of context though. So what we have is a level of support, and if you think about this level, apologies for the draw, if you think about this level at the hard right edge, every time that price came into it, it bounced off it. So that was the original turning point. Price came back into the level, then bounced. It came back into it sort of partially and then bounced again, turned away, came back in, turned away. And this was really the first time back into the level. There's been quite a bit of positive economic data out of the UK. And if you think about looking at that pattern at the hard right edge, that would have looked very convincing for what is sometimes referred to as bottom feeders, right, where people are trying to buy and sell off tops and bottoms just because they think the market's oversold or overbought, even if that is a real thing, right? And as a result of that, the people try and buy and sell, believing, I'll just change the colour of that, believing that they're going to get a bargain, and ultimately that's going to make them a ton of money because they're going to buy the pound cheap, and there's going to be this huge rally. The problem is, it seems as if initially that's going to be the way. So if you consider this price action in here, this bounces off that initial. Let me just highlight that 1 second. This bounces off that initial turn almost to the pip in here, and this candle formation would have very much looked like it was going to head up at the hard right edge. The hard right edge is this space we all have to the side of our charts. It's where the price is in the here and now. Okay, so without knowing any of this information, this is all those traders would have known, i.e. support resistance traders. So support resistance trader looking for a bargain, price comes into the level, so let's just draw that. So you've got your level off to the side, it's been hit several times, comes back into the level. Your support resistance trader, as I say, starts bottom feeding, looking for that bargain basement deal, and price comes into the level and starts to bounce off the level. Now that is going to be extremely enticing for those types of traders Okay, they don't know what's coming next. They have no clue. This is the hard right edge. They're hoping that price will continue on long enough for them to make some money, but it's this area here that is going to convince them in, because this pattern would have resembled very closely, it's never exactly the same, but would have resembled the several times in the past that price had done exactly the same, but that had actually gone on to make some money. Same again here. That would have looked very much like it was working as it had done historically. So this is what gets you in to take some risk. This is what gets you to pull the trigger and come in off the sidelines, because if a level's been touched once, twice, three times, right, a triple bottom, that's a screaming buy for that type of trader. So that's what we're trying to take advantage of as trap trading protagonists. We've hacked into the vast majority of trading strategies, reverse engineered them, and we're trading against their positions. So if you've ever taken a level of support and you thought it was just a slam dunk buy or resistance, a slam dunk sell, and you took those trades only to find out that within a very short period of time after entry the market starts going against you, then if you want to put yourself on the right side of that equation, you want to join me in my inner circle, make sure you click the link below this video and join me on the inside, and I can explain to you what we've been doing with this type of trading for well over a decade now. So just getting back to the gap trap, I digress slightly, apologies for that. If you think about the trader who went long up in that area last week sometime, and they believed that the market was going to continue on, and the weekend came and this Brexit leak came out of the UK government that there's going to be this hard Brexit. The market hasn't liked it, and you open up, it gaps down. Right, so if you were in here as a buyer, you find yourself down here now losing money, right? There's no other way to describe it. The gap has created that loss in your account, and there was very little you could do about it. In many ways it's a very brutal type of trap, because you just are where you are. If you took a trade, you know, latter part of last week, you held it over the weekend, you maybe weren't really au fait with the concept of event risk, or you maybe thought that you'd be okay, and you woke up this morning and you found that it's gapped, it's maybe jumped your stop loss, and now you're in trouble, you're losing money. So you're hugely motivated. Now, one thing about trading traps is we've also got to consider the approach of other traders. We've got to consider that people trade gaps from a profitable perspective. When a gap occurs, they don't happen that often in the forex market, but it's a very typical strategy to basically trade the gap. It's called fading the gap, and it means if there's a gap down, you'll buy in to that gap down and the gap will fill. If there's a gap up, the same thing, you'll sell it and you'll fade the gap and the gap will fill. Now here's the thing, if you're a buyer now looking to trade it across this gap, right, and hoping that that will fill, one of the very common types of behavior of that type of trader is that when the gap actually does fill, what you will do is once it drifts across the gap and fills the gap, what you will do is you will exit. You will exit your buy position. And when you do that, if you were a buyer down in here, in order to take your profit, right, TP, take profit, the only way you can do that, liquidate the money that is in your account in a positive, is you must sell to exit. You must sell to exit. You must sell to take your profit. Okay? Now just hold that thought for a moment. Now also consider the individuals who found themselves on the wrong side of this gap. How motivated is the person who bought in here believing that the market would follow through to the upside, and then they just automatically wake up this morning and find themselves in trouble, down, prices gap down, it's jumped the stop, and they're desperately hoping that it comes back. What do you think they'll do when they get that opportunity if price actually does fill the gap? to exit their position at break even, I suggest would be what they are super motivated to do. So of course, if they were buyers in here, you guessed it, they must sell to liquidate those losing positions at break even. Right? They're underwater, there's no way of denying that, right? Basically, there's your line. They went long in here, and then they find themselves, they just are where they are, they're just in this area here. And of course, the distance between there and there, maybe it jumped the stop, they are losing that money. It's a negative, and they are very, very upset about that, right? Their motivation from originally taking this trade and hoping that it would head higher, at that moment was all about the money. They were hoping to make some money. They were hoping that this, double, triple, quadruple bottom was going to hold long enough for them to make some profit. However, they wake up this morning and find themselves down in here, and that's just a reality of where they are. So they could be panicked by that, maybe took too much risk, want to exit the position desperately now, because it's not about making money now. It's about getting back to your entry point and bailing out of this and getting out of this bad situation alive. And in order for you to do that, to bail out, right, you must exit your buy position, and by doing that, that's going to create supply. So you're going to have supply in this area based off of the fact that you're going to have people taking profit who were making money on the way up, who were trading this gap back across the gap, and you're going to have supply from people who are selling those original buy trades off that level of support because they can't believe their luck that they've got this opportunity to bail out at break even. And you know that to be true. You know that motivation exists, because if you've ever been in a losing trade, and especially if you just blink and you find yourself down a ton of pips and a ton of money, then your motivation shifts. You don't really care so much about making money anymore. You just want to get back the money that you're losing. Break even becomes a hell of a result, right? It's the second best trade in the book, a scratch trade. So if you can't win, you might as well not lose. And that becomes the mentality of that trader. So of course, those traders, in order for them to exit those trades at break even, because they were originally buyers in here, they must sell to do that, and that's going to create more supply. Now there are more supply demand dynamics in this price chart, a little bit beyond the scope of this video, but I hope that's helped you understand what a gap trap is. And the idea would be, if this pulls back into this area, this looks like a great short, and from a fundamental perspective, it's a great short to sell sterling and buy US dollars at the moment. So I hope you found that interesting. If you'd like to learn more about how we deconstructed all these trading strategies, we're talking major banks, hedge funds, prop traders, it doesn't really matter, retail traders, we've deconstructed these strategies over a decade. And if you'd like to learn how to get a hold of this skill and put yourself on the right side of this equation, then click the link below. If you like the content, like it. If you've got some trading buddies, share the video with them, and I'll see you on the inside.